This is Alan Bush with Archer Financial Services. In the stock index futures, seeing prices trading higher now in response to the factory orders report here in the U.S. coming in stronger than anticipated. But I think more importantly, we're seeing the possibility that the Fed will come in with some type of additional easing of credit, possibly in the form of a third quantitative easing program. There's even some talk that they could announce some additional easing at the next Federal Open Market Committee meeting that takes place at the July 31st, August 1st meeting. I do believe that the potential for easier credit from the Fed will outweigh the negative implications of the problems that we are seeing in the Eurozone. The situation there seems to deteriorate. So look for higher prices from here in stock index futures. We are now at 2-month highs. And I think these gains will follow through today. Over in the currencies, as the situation seems to get worse in the Eurozone, we would expect the Euro currency to come under some downside pressure here, even though we did have that so-called agreement at the end of last week from the European Union. One interesting development, we are seeing the yields on Danish debt coming in at negative yields. Normally we would not get involved in interest rate areas of this nature, but the fact that we do have negative yields in Denmark suggests that the severity of the problem is increasing as far as what's going on politically and economically in the Eurozone. Funds are looking for a safe haven, and it looks like Denmark is one of the places where funds are flowing, even though they are paying negative yields to protect the money there. So all of this suggests that the Euro currency is headed lower, even though we're basically steady right now in the Euro currency. Still thinking that the main trend on the Australian dollar and the Canadian is lower. We did have a nice bounce, but I think that is likely all we'll see on the upside as the global economy deteriorates, at least as far as what we're seeing in China and in the Eurozone. We would expect the commodity currencies, the Australian dollar and the Canadian, to come under pressure. Credit markets a little bit easier, under some pressure with the factory orders report here in the U.S. coming in a little stronger. I think that will only be a temporary move. I think we'll see futures rebounding from here, and I think there's a very good chance that we will close steady or better on the day for Treasury futures, even though we are currently trading lower. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.